when Wall Street is 5% of Bitcoin, that means 95% of the 2.5 trillion is not Wall Street. When Wall Street is 10% of Bitcoin, Bitcoin will be at $1 million a coin, and that means there'll be nearly $20 trillion of not Wall Street money that will be sitting everywhere else in the rest of the world, in the rest of whatever, right? The energy, it's impossible for anybody to take over Bitcoin in a hostile way, because the more aggressively you buy Bitcoin, the more you empower everybody else that disagrees with you. You see? Like, the harder I go, the more powerful everybody who took a different point of view becomes. And so I refer to it as a perfect machine composed of imperfect components.
Michael Saylor emphasizes Bitcoin's potential as a transformative, decentralized financial asset. With only 5% of Wall Street invested, institutional adoption could propel Bitcoin's value to $1 million per coin, enhancing its role as a dominant digital asset. As more institutions join, Bitcoin's decentralized nature strengthens, ensuring resilience and security. Its design uniquely positions it as a trustworthy and anti-fragile system in an evolving global economy. In an AI-driven future, Bitcoin will underpin digital economies, replacing traditional assets. Its volatility and trustless nature make it the ideal foundation for financial transactions, driving widespread adoption and innovation.
Bitcoin's the only digital commodity, and if you're going to be a public company, then you need to be capitalized on a commodity. And Bitcoin is the first commodity in the history of the world that outperforms the S&P index on a consistent basis. So if you are a public company, it's a very simple choice. There's one best asset, and there is no second best asset, right? I'm an aeronautical engineer. I have conviction in Bitcoin like you have conviction in using aluminum to build an airplane. And the reason you use aluminum to build an airplane is because if you use steel, the plane won't fly. Bitcoin works for a public company because it's higher performance than the S&P, and it's more volatile than the S&P, and it's a commodity, and so you can go to 100% leverage. And every mathematical model you can possibly work through indicates that the right answer is 100% Bitcoin. If you diversify that, all you're doing is bleeding off, diluting the volatility, which devalues the options. When you go from 100 vol to 40 vol, your options market would go from 100 billion to a billion. So you're going to destroy your own options market. And if you dilute the Bitcoin with anything else, you would destroy your performance. And so the first order answer is it makes no sense because the options are destroyed and the equity is destroyed. The second order answer is you can't build a Bitcoin-backed convertible bond or Bitcoin-backed convertible preferred stock or Bitcoin-backed fixed income preferred stock if you're not Bitcoin-backed, right? And so if Berkshire Hathaway, for example, were to buy $100 billion worth of Bitcoin tomorrow, they might have more Bitcoin than us, but they couldn't issue equity and credit instruments that have Bitcoin's performance because they would be diversified. And so at the end of the day, it makes sense for us to be 100% Bitcoin because it gives you the first order best result, and then all of the securities that we build inherit the volatility and the performance of Bitcoin. In essence, be destroying, we're crippling our own securities and crippling our own performance to diversify. I think we live in a world of abundance, and there are more messages and there's more entertainment. You can sit and you can watch Magnus Carlsen chess videos, and you can almost watch an infinite number of commentators commenting on the same chess game by Magnus Carlsen if you want to go down that rabbit hole. There's infinite everything, infinite entertainment, infinite message, infinite news. And everybody's overwhelmed and bombarded. And so it's important that if you have a message that you condense it down to something which is very efficient. People don't have time to read 30 pages. They don't have time to read 2 pages. They probably don't have time to read 2 paragraphs, right? if I were to write a book on why Bitcoin is the superior investment asset, 0.1% of the people would read the book in a decade. If I simply said there is no second best,
Amen.
and if I can get like a 3-year-old kid with a beard to say there's no second best, like baby Saylor can get the point across 1,000,000 times as efficiently. And so I think that these are important because you just can't spread the information efficiently enough unless you put it into a viral package. If you read the history of the Rothschilds, the greatest bankers of the 19th century, they had a network. The Rothschild banks were the network. The primary capital asset that traded was sovereign debt. They were trading UK debt and French debt and German debt, par value 100, and they moved those instruments, bearer bonds, around very rapidly. And that's how the entire banking network worked in the 19th century. And then when they did cash settlement, you know what cash settlement meant? Cash settlement for the Rothschilds in the 19th century. But I bring this up because Bitcoin's a peer-to-peer cash system, right? And all these people, like, they're always tweeting at me like, you don't understand what peer-to-peer cash is, okay? When the Rothschilds cash settled a bearer bond transaction in the 19th century, that meant they traded the bonds for gold bullion or gold coin. And so cash meant gold. It meant metallic money, either in bullion form or in coin form. But even then, gold was too slow and too cumbersome to settle very frequently. And so there was a fiat currency, these bonds, trading over the cash system in the gold standard all through the century. And I think it's important because if you look at Bitcoin today, Bitcoin's digital gold, it's digital cash. What does it mean? It's a bearer instrument, a monetary instrument. What do I think is going to happen? I think it's going to keep growing from 1 trillion to 10 trillion to 100 trillion. It's going to keep getting bigger and bigger in the capital stack. And I think other forms of money, fiat currencies, will continue. You're going to have sovereign debt, corporate debt, other type municipal debt. As long as you have cities, they'll issue debt. As long as you have countries, they'll issue debt. As long as you have companies, they'll issue debt. As long as you have families and they want to buy a house, they'll issue debt, mortgage-backed debt. You're going to have all these forms of credit when people cash settle. The settlement network will be Bitcoin. Was the world built on a gold standard in the 19th century? Yes, gold. But what circulated? Sovereign debt. Will the world be on a Bitcoin standard in the 21st century? Yes. What will circulate? Every form of credit, of every credit-worthy counterparty, and then on top of that, equity, layers of equity from public company, private equity, and you'll have all sorts of other collectibles. I don't see a world where that disappears. I don't see a world where it needs to disappear. I see a world where there are many types of assets, but the king apex asset, the root asset, which everything else is settled on, or everything else is oriented to, the center of gravity of the financial universe of the 21st century emerging is Bitcoin. Sorry. That falls toward the center of gravity, which is the middle of the earth, and none of you have been there. That doesn't mean that it doesn't control everybody, right? Everything will be oriented in a frame of reference.
Michael Saylor sees Bitcoin as vastly underutilized, with only 5% of Wall Street investing in it, leaving significant growth potential. He predicts its value could reach $1 million per coin as adoption increases. He also views Bitcoin as essential for the AI-driven economy, offering unmatched security and reliability. Its decentralized nature positions it as a key foundation for future global financial systems.
Classical economics, they talk about the economy being driven by land, labor, and capital. The consequences of AI is digital intelligence, Bitcoin is digital capital. The consequences of the AI is that the AI is going to do the work of 1 billion people, then 10 billion people, then 100 billion people, then 1 trillion people. Then that AI will go into robots, and the robots will do the manual labor of 1 billion people, and then 10 billion people. And then it will go into your cars and your appliances and everything. And so what's happening? We're going to digitally transform labor, and the demand for labor as we know it is going to change, fall. The robots don't need as much space as we need, and the AIs don't need any space. So the demand for land as an input to the economy will fall by a factor of 10. The demand for labor as an input to the economy will fall by a factor of 100. What's left? Capital. Capital is going to explode. You know, you're going to have massively valuable companies that a million robots creating a million robots with like 22 employees that are worth trillions of dollars. Don't need the land, don't need the labor, have the money. Where's the capital going to flow? It's going to flow into the Bitcoin. You know, if you haven't figured out how to make money by putting AI into your business, that's hard. Then I give you the easy answer. You just buy the Bitcoin as much as you can buy, because we know where all the money is going to eventually go. The capital is all going to flow in the Bitcoin network, and the more everything else grows, the more Bitcoin is going to grow. So you could just go right there and then wait for the world to enrich you.
Is there a point where one entity holding too much Bitcoin creates negative effects on the network or reduces its utility?
No, I think the network is, the protocol is protected by the distribution of the mining, the distribution of the protocol itself, the distribution of the nodes, the distribution of the holders, the distribution of the exchanges, and the distribution of the derivatives, and the distribution of the regulatory bodies on top of it. That's a global phenomenon. One company, you know, if BlackRock holds 3% or 2% of the Bitcoin, or if Strategy holds 2 or 3 or 4 or 5% of the Bitcoin, it doesn't matter, because the price of Bitcoin went from 10,000 to 100,000 while we were pursuing that 2%. And that meant that while we pursued that, by the way, technically, if you go to Saylor Tracker, you will find that all of the work that we've done to get to 2.5% resulted in like a $23 billion gain for us, $23 billion, but it resulted in a $2.2 trillion gain for everybody else. The world's full of people that hold Bitcoin or have Bitcoin in a country you don't like, in a method you don't like, doing things you don't like, but they're empowering you, and the harder they go, the more they empower you. What would happen if Berkshire Hathaway decided they're going to buy $100 billion of Bitcoin tomorrow to all the rest of us, right? It's not hurting you. It's helping you. What happens if they do the opposite, right? And so I think Bitcoin is a classic anti-fragile network, and it's getting more stable. It's getting more conservative. It's getting more indestructible, more anti-fragile, the more that it is embraced by any entity, whether you agree with their values or not. They're all just strengthening the network against whoever is the next attacker.
Michael Saylor envisions Bitcoin as a transformative force in the financial world, emphasizing its untapped potential and security benefit. With only a small fraction of Wall Street investing in Bitcoin, he highlights the vast opportunity for growth, projecting its value could soar to $1 million per coin as adoption broadens. Additionally, he sees Bitcoin playing a critical role in the AI-driven economy, acting as a secure and decentralized foundation for the future of global financial systems. This perspective underscores the growing relevance of Bitcoin, not only as an asset but as an integral part of emerging technologies and economic infrastructures. It challenges individuals and institutions to reconsider their approach to digital assets and their role in shaping the future. What are your thoughts on Bitcoin's potential to reach $1 million per coin? Do you believe Bitcoin is essential for the future of the AI economy? Share your views in the comments.